Okay.
Good afternoon. My name is Rich West. I'm the president of the Culver Redevelopment Commission. Today is July 29, 2020. This is a presentation from the Redevelopment Commission for the other taxing bodies in our areas of TIF. We're required to do this presentation annually. Last year, we did the presentation with the assistance of our consultants from Baker Tilly and recorded that presentation. The gist of that presentation that was recorded is still valid this year. The only changes are the actual revenue and expenses that occurred in 2019. The recording you're going to see shortly talks about expenses in 2018, but the bulk of the recording deals with the mechanisms behind TIF funding and how it affects your individual taxing district. Briefly, in 2019, the Culver Redevelopment Commission, 2 TIF districts, collected about $510,000. We spent about $440,000 during the year. The bulk of that spending, just under $200,000, was for bond repayments. There are bonds for stormwater sewer treatment. The town took out a bond on which we make an annual payment of $30,000 a year. And so that makes up the bulk of, or 50% of what we spend during 2019. The other projects we supported during 2019, most of which were Stellar related. The trail projects through the park and the Academy easement, and then also the West Jefferson Street development and Route 10 development accounted for the bulk of the other dollars expended. So if at the end of the presentation, if there are questions, you can contact the Culver Redevelopment Commission, and you can reach me at my town email, which we will provide you. And I think we can start the presentation now. This broadcast is being recorded and will be available on the town website so that you can share it with your constituents at a later date. Jonathan, you want to start the projector?
Allison, they've worked on this presentation. UMBA has done a lot of work for our redevelopment commission for the town of Culver. They're an accounting firm that does a lot of consulting and financial consulting with government entities throughout the state of Indiana and other places. But they do a lot of work in TIF districts. They've done a lot of work with our TIF and our redevelopment commission, helping us with some bond issues in the past. So, Heidi, it's all yours.
Thank you very much. Well, thank you.
Associate Kyle Carlson, they and our redevelopment commission helping us with some bond issues in the past. So, Heidi, it's all yours.
Thank you very much. Well, thank you everybody for being here today. I'm not sure who all in the audience is from an overlapping taxing unit and Saul Library, or other folks from overlapping units in the room. School. Okay, great. Well, thank you for being here today. So the reason why we're here today, as Rich mentioned, the legislatures put into law last July 1st, it went effective, Indiana Code 36.725.8, that all redevelopment commissions in the state of Indiana have to meet annually, and those with TIF areas have to cover 3 different items in regards to the TIF areas, and that one is budget, one is long-term plan, and the third thing is the impact on the overlapping taxing units. And so with that, we have a presentation put together to touch on all of those items. Again, because it's being recorded, we're going to wait and hold all questions to the end. So be sure to write down your questions that you have, and we will answer them at the end. So we're first going to start out with all of the current members of the Culver Redevelopment Commission who are here today. And then followed by the financial advisory team at Baker Tilly. We were UMBA, we are now Baker Tilly. It's the same team, nobody's changed. So just a name change. but myself and Kyle is in the audience. So we always start out with a little bit of TIF 101. I think it's helpful for overlapping taxing units to know a little bit about TIF. Not that we sit around and educate very often, but we do utilize TIFs throughout the state of Indiana. Our firm helps assist with over 450 TIF areas throughout the state of Indiana, so it is definitely a heavily utilized tool throughout the state. So you can see here on the slide, this blue area is the base assessed value within the TIF area. So that is when a TIF area is created, the net assessed value of all of the properties within a TIF area. All of their net assessed values make up the base AV. So you have this database or a parcel list of all of the parcels that encompass the TIF area. And then all of the assessed value within the base then continues to go to the overlapping taxing units. So when that TIF area was created, whatever the net AV was, the libraries, the schools, the county, the township, the city or town that's located in it, and any special districts continue to get that assessed value as a part of their tax base. Any assessed value increases from the base value when it's put into place, or the incremental assessed value, which is this green area, is what is captured by the Redevelopment Commission. That is assessed value that is captured. If you take that divided by the tax rate divided by 100, you get tax dollars or TIF revenues. Those TIF revenues come back to this body to solely use for projects in serving or benefiting that TIF area. And so it's not, those tax dollars are not distributed to any of the overlapping tax units. They just come to you guys as a body to use in serving or benefiting the TIF area. Once all TIF areas have a maturity date in which they end. And so once that life ends, which is here, so if you create a new TIF area today, it's got a 25-year life from any bonds that are issued. So once that TIF area ends, then all of that assessed value, the incremental and then the base continues, is released to the overlapping tax units. Just a little generic TIF 101 or Public Finance 101, assessed values and tax rates are inverse of each other. So when you have assessed value that goes way up, like when a TIF area ends, then tax rates come down. And so those are two important things to keep in mind when thinking about TIF areas and when they end. Some terminology that I think is important to know here is the Redevelopment Commission oversees the redevelopment district, which is typically coterminous with the boundaries of the city or town that you're in. And so within the black boundaries or the redevelopment district, assume those are the town limits, then you have two things, an EDA, an economic development area, and then a tax allocation area or the TIF area. And so the red boundaries here represent the EDA. And that is just an area within your community that you're trying to focus development in. And then within that EDA, then you establish an allocation area, which is the like tan shaded box. And the allocation area is the legal boundaries of where you can capture the increases in AV from. And your EDA boundaries and your TIF boundaries don't have to be coterminous with each other. So if there were a couple places within your community that you knew were getting ready to be built or something be renovated, and you really wanted to capture that AV, you could have those as allocation areas with a bigger EDA so that you could use the TIF monies from those allocation areas anywhere in serving or benefiting the EDA. Your guys' TIF areas right now, your EDA and your allocation area boundaries are what we call coterminous, meaning they're the same boundaries. So those I think are just three kind of important things to know as terminology goes. Also, as a redevelopment commission, you actually have the ability to levy the special benefits tax or property tax. So if there was a project that you wanted to do payable from TIF, you could add a property tax backup onto that bond issue. You do have the wherewithal to do that. And so that's what this SBT or the levy, the special benefits tax means. Again, just basic terminology that I think is important for all redevelopment commissions and overlapping taxing units to be aware of. As I mentioned earlier, TIF areas do have end dates. It's really based upon whenever the TIF area was created. And so if you have a TIF area that was established before 95, you can see that this one's a little bit unique. These are what we call legacy TIF areas, meaning that previously they didn't have a maturity date. they just were going on forever. Well, legislature got smart a couple years ago and decided that it would either expire in 2025, or if you issued bonds in 2015, then whatever the maturity date is of those. And so you guys actually did a bond issue in 2015 to extend the life of your TIF Area 1. And so that area now ends the maturity date of those bonds. If you have a TIF area that's established between 95 and 2008, then it has 30 years from the date the declaratory resolution is signed. The declaratory resolution is the legal document that set up the TIF area. And so it's exactly 30 years from that. The TIF area that's created after 2008, so if you created a TIF area today, it has a 25-year life that does not start until you issue bonds or leases. So until a long-term obligation is gotten into, then it has a 25-year life that continues on. So we're going to get into the two areas that you guys have here. We're going to start with the Culver Economic Development Area 1, or TIF 1. So here we touch on the various expiration dates and when they were expanded. So the TIF area was created in January of 2004. And then it was further expanded a couple of times to add in different parcels for different reasons to capture the developments that were occurring in those parcels. So each portion of the TIF area actually has different dates in which it ends. And so we work closely with the county auditor's office just to make sure that we know and keep track of when those TIF areas are going to end, especially with the bond issue that's outstanding. It's very important to know when the TIF areas end so that you have TIF to pay for your bonds. In 2018, this TIF area generated a little over 418,000 of TIF. In 2019, we're projecting about $448,000 of TIF to be generated. There is one bond issue that is currently outstanding in TIF 1. It's the 2015 bonds. Right now, they are outstanding in the amount of $796,000. They mature August of 2025, and they are payable solely from TIF 1. So the TIF cash flow serves as your budget and your long-term plan for this particular TIF area. You'll see the same slide for TIF 2. A great planning tool for you guys to have in place and to really use as a working document to use at your discretion. So you can see on the top line item is the estimated TIF revenue that we anticipate coming in each year of $448,000. The 2015 TIF bonds that I just mentioned are about $150,000 a year that come out of that first. Debt always gets paid first. And then you guys made an obligation to the Waterworks District that those 2015 SRF bonds that they have in place, that you would pledge $30,000 of your TIF each year to those bonds. So those are not bonds of the Redevelopment Commission, but you are utilizing your TIF monies to help pay those bonds and to keep the rates down that the taxpayers are paying. In addition to those two debt obligations, professional services, and then what you guys give to the Marshall County EDC is in the next line item. Each year you also utilize TIF monies for marketing and branding and the holiday lights here in the town. Also, each year that you earmark $30,000 for this facade grant program that you have in place. And then this future projects line item we'll get into a little bit more detail on the next slide, but you can see in 2019 about $244,000 of expenditures is what you were shooting for. And then that amount changes each year depending upon the projects that we'll talk about again in the next slide. So you can see the net increase or decrease each year, just comparing your revenues to your obligations. The beginning balance, this number is the 926,000 represents what is currently in the allocation fund for this TIF area. And so in this cash flow schedule, we always take into account what is currently in your funds, just because we know some years you're going to spend a little bit more than what is actually coming in that year. So we can show a slight spin down in various places. So you can see that overall there is a slight buildup of TIF revenues, and it just shows your guys' availability of funds to do projects if there are more than what we currently have on our list as far as future projects go. So again, a great planning tool for you guys to have in place. The future projects that I mentioned in the last schedule are listed here with the cost estimates, rough estimates out to the side. The State Road 10 sidewalk, extending utilities to Stand Hill Farm, walk and bike paths, a new fire truck. The new fire truck, you'll see 50,000 out of this TIF area and 50,000 out of TIF 2. You'll see that again here shortly. Beach Lodge renovations, and then these are the annual ongoing obligations that I mentioned in the previous slide as well, that the Redevelopment Commission is planning for. And again, as you could see in the prior cash flow schedule, you do have room for more projects. We're going to move on to TIF 2. TIF 2 was created in January of 2006. It has a 30-year life that ends in January of 2036. In 18, you received 82,000, a little over 82,000, and paid 19 going forward. We're anticipating it to be about $72,000 a year. There is one bond issue outstanding, the 2008 bonds that are payable just from this TIF area that only have 200,000 outstanding, and they mature in February of 2024. The cash flow schedule looks like TIF 1, similar to TIF 1 as far as the setup goes. You can see the estimated TIF revenues, a little over $72,000 each year. The bond payment, the 2008 bond payments are about $44,000 each year that come out first. Professional services, earmarked funds, Jefferson Street improvements. You can see over the next 3 years, there are funds earmarked for that project. The fire truck, as I mentioned before, is another $50,000 out of this fund. And then you can see the estimated increases or decreases each year. The current balance in this fund is $418,000, a little over $418,000, leaving you with 380-some thousand down to about 280,000 out in 2023. So you do show a slight spin down of this fund. But again, still room for more if that's something that the Redevelopment Commission desires. So as I mentioned at the beginning of the presentation, impacts is the third piece of information that this presentation should be covering for overlapping units. So we're going to get into that. So I think it's just important that everybody realizes when I say overlapping tax units, what that means. So within the TIF area, and really within anywhere, communities, but specifically within the TIF area, there are overlapping tax units that are made up of the county, township, city or town, school, library, and any special taxing districts. So TIF, some language that you'll hear about TIFs when you create them are that the development that are occurring within the TIF areas would not occur but for the TIF area being.
What happened?
Rich, are you on? It looks like it did cut off with a few slides to go. That's all the recording I have was 15 minutes.
Really? Okay.
I have those slides. I can share them.
Kevin, are you the only one?
Looks like I'm the only one.
That you're the only other member on. The remaining slide, it looks like, does it take away funds from other units? I think that was the next subject she was going to cover. I can let me share that real quick, and we can kind of wrap up.
That's okay, guys. I know most of that stuff. I just wanted to see if anything had changed over the last couple of years.
Well, I think we want to share it anyway, so I don't mind at least covering this last
Right,
section.
we're,
here.
we're
Yeah.
recording this, so it'll be available. So, yeah, Jonathan, if you can
Sure.
you read it from your
Yep.
screen?
Yep. So the section they were about to get to in the presentation was impact of TIF and does it take away funds from other units. And the summary is if the increased assessed value from new developments would not occur but for the TIF incentives, then it cannot be lost to the other taxing unit. So that is often referred to as the but for argument for TIF districts. TIF postpones adding new assessed value to the tax base, which postpones the reduction in tax rates for funds with levy limits, and postpones increased revenues from funds with rate limits, and postpones reductions in circuit breaker credits. During TIF capture, other taxing units may immediately benefit from personal property AV that is currently not captured. If a portion of the TIF AV is passed through to other units, new jobs and wages may increase local option income tax revenue. After TIF ends, the increased assessed value is added to the tax base of all the taxing units. And then she also mentioned the 2016 TIF study that was done by Purdue Extension and mentioned that the results showed that there's no loss or shifting of funds if the but-for test is satisfied for TIF districts, that there's no loss or shifting if there are no other means to fund the incentives or infrastructure besides TIF, and that there's no loss or shifting if TIF district funds the purpose for which it was intended and does not continue to exist after the infrastructure is fully funded. The full slides and presentation are available if anyone watching this at a later date would like to see. I think the remaining ones covered past projects funded with TIF revenues going back to 2005 when it was first formed by the town of Culver. And again, just that financial data going back to that original formation of the district and how the assessed values have changed over the last 10, 15 years.
Thank you, Jonathan, for supplementing that section of the recording. We'll see if we can get that fixed for future productions. This recording will be available on the town website, and we would encourage any of the overlapping taxing units to share it with their constituents and their boards. So thank you very much.
All right. Thanks, everyone.